Hi everyone and welcome to today's morning report on Tuesday the 9th of May with me, Japan Market Analyst at Handset Markets. We've got some fairly sort of consolidating moves on the major forex markets. Euro's basically flat, just a little bit lower, sterling flat, but the dollar is still gaining a bit of ground, and that's sort of rebounded actually in the last couple of days. Now you've got Treasury yields which are looking strong still. That's the sort of 2-10 spread, which sort of picking up tends to sort of reflect an improving risk sentiment as the 10-year sort of picks up. So that 10-year gaining ground again is positive for the dollar generally. And it's interesting that the dollar index has sort of found support above that trend line again. Now that's come as the euro's just dipped back a little bit in the wake of Macron's victory in the French presidential election. I don't necessarily think though that the euro correction is going to last too long, because I think the euro looks pretty strong, and I think markets are going to quickly focus on how the ECB is looking out for sort of expectations of how the economy in the eurozone is beginning to sort of recover and gain traction in that recovery. And I think that's going to sort of maintain the euro positivity. Now, generally speaking, yesterday we saw equity markets fairly flat, not too significant in terms of gains. You saw Wall Street just poking on to an intraday high on the S&P 500, but closing back down just below that resistance. And that came as markets generally across equities just consolidated yesterday, although there is a little bit of traction gaining ground to the upside again today across the European markets. You had Asian markets that were flat, Wall Street was flat, but as I said, the European markets are gaining a little bit of ground. Now this is interesting. Look at this, the VIX 9.86. Now the VIX basically never closes below 10, and I can go all the way back, and it hasn't closed below that 10 level, I think, since 2007. One more, there you go, since 2007. It's incredible the sort of low level of volatility we're seeing on the VIX, and that can reflect two things really. Possibility of obviously how positive equity markets traders are, and also an element of complacency, but generally speaking the low level of the VIX should go hand in hand with strong equity markets. It's just that when the when the VIX starts to turn around, is when you need to be a little bit careful, because it would suggest that traders are beginning to take up sort of short covering positions on the downside. Sorry, to cover their portfolios with short positions, to reflect sort of the risk of increasing possibility of a sell-off. So that's what we've seen on equity markets and forex today. Now my chart, sorry, the economic calendar, if I can find it, is pretty bare today. Not a great deal. You had overnight Aussie retail sales disappointing, worse than expected, and also a downward revision as well. So the Aussie is under pressure today, but generally speaking, not a great deal to get too interested in. Jolts this afternoon, 3 o'clock. 567 is apparently the expectation there, although Reuters don't have one, but just mildly back from the 574 last month. But my chart today is the Aussie actually, and I looked at the Aussie before we had the retail sales, and I was going to write it up, and then I saw that obviously we had this bull hammer candle on Friday, but yesterday's candle was negative, and that told me that the market was not ready for a recovery, and today it's sort of completely blown that support out of the water and continued to the downside. So the outlook for the Aussie is continuing to be bearish. Now you had this big top pattern completed, about 250 ticks of top pattern, 75 big figure up to 7750 measured down, projected down. That gives you sort of 7250 area, doesn't it? Which is perfectly possible. That's another 100 ticks to the downside, and that sort of puts you into the realms of this sort of old sort of trading around December really. And I think that's perfectly possible looking at these momentum indicators, very negatively configured, rallies being sold into. You can see the little sort of unwinding moves on the RSI which continue to get sold into, the MACD line's lower, stochastics lower. It all looks pretty negative. And here's the hourly chart. You can say that there was a sort of a degree of consolidation, I suppose. 73.65 up towards 74.25, but again you've broken down from that. I suppose as a near-term target you could take that as sort of, I don't know, sort of 70 ticks, 60, 70 ticks of downside projection from the breakdown, so that's 73 figure area. So that's an initial sort of downside target, I suppose you could derive, but to be honest, I think there's further downside to be seen in any sort of move to unwind this hourly RSI seems to be sold into, and also the MACD lines as well. So use that. You've got resistance now 73.65, around 70 sort of 380, sort of little bit of resistance there. Today's intraday high before the market started to fall away after those retail sales numbers was 74 figure. So you've got a fairly strong band of resistance near term, and I think rallies are going to be sold into on the Aussie as this one continues to track lower. So I wish you good luck in your trading today, and I'll speak to you later. Thank you.